Welcome back, fellow bookworms. I wanted to finish a little bit of this chapter. Remember, we were going into chapter 4. We left off on banks and non performing assets. You know that I'm reading from Doublespeak by Mr. William Lutz. You can always check back, guys, with the playlist if you want to watch it in consecutive order, okay? The videos will be in different segments, guys. I'll try to keep this really still. At least the lighting's really good today, right, guys? We're learning a lot from this book. Of course, this is kind of just giving people motivation to want to read again, to look things up, to be fellow bookworms. So, The Wonders Wrought with Accounting Doublespeak. This book, especially, is really good because we're learning a lot by deciphering the buzzwords that we hear in commercials and advertisements and different periodicals, right? It kind of demystifies what we see in our everyday life. So I think it's been pretty good. I hope you enjoy it too. So we'll go into this section, The Wonders Wrought with Accounting Doublespeak. Accounting doublespeak allows corporations to do all kinds of wonderful things. In 1985, the Penrod Drilling Company, an oil company owned by the famous and very wealthy Hunt brothers of Texas, made money despite posting losses of 100 million. In 1986, Tenneco announced that it would change its accounting methods and would take 988 million in charges against prior year's earnings. It's not misleading, but it's a clearly timed change, said Lee Scheidler, an accountant at Bear Stearns and Company, the Wall Street investment banking and brokerage company. It is quite creative accounting, and other oil companies may want to do the same, said Norman Strauss, a partner at Ernst and Whitney, a national accounting firm. If you think charging presents expenses to past earnings is a neat accounting trick, follow this one closely. A study in 1986 revealed that during one 4-year period, 10 corporations had combined total domestic profits of 39.67 billion and not only had paid no income tax but had received tax rebates totaling 1.5 billion. One of those 10 corporations making all that money but paying no taxes was AT&T, which disputed the conclusion that it had paid no taxes. AT&T pointed out that under special provisions of the tax code, a growing company may defer paying taxes until years later. Thus, a company that continues to grow may defer paying taxes forever. AT&T was formally organized in 1899 and has been growing ever since. AT&T contended that deferred taxes should be counted as taxes actually paid. Now, isn't that a neat trick? Don't pay the taxes, but count them as an expense, as if you had paid them. And you thought that magicians performed their tricks only on stage. In Las Vegas, AT&T defended its accounting practices by pointing out that many corporations like itself use various accounting styles in different reports to shareholders and government agencies, in which they sometimes count taxes owed as having been paid, depending on the point they are trying to make. In other words, AT&T keeps two sets of books. This is what we've been saying a lot in the truth movement, guys, when it comes to accounting and a lot of these loans and stuff. That's crazy. Look, two sets of books, one for the shareholders in which the taxes are recorded as paid, and one for the government in which the taxes aren't paid. See what creative accounting can do? Not to be outdone, General Dynamics, the nation's largest military contractor, paid no federal income tax from 1972 to 1986, a period during which the company reported making more than $2 billion in profits. By using an accounting method called completed contract accounting, General Dynamics was able not only to avoid all federal income taxes, but to pay over 100 million in dividends to its shareholders, dividends that were not taxable. Really creative accounting can be very profitable. You may not have realized it, but IRS regulations and those famous generally accepted accounting principles allow corporations like AT&T and General Dynamics to report their profits two ways: as low as possible for the IRS and as high as possible for the shareholders and the public. The effect of this accounting wizardry, of course, is a lower tax bill and a rosier annual report. Now that now that's real doublespeak for sure, right? This is a great um chapter 4. This is intense. Upping the ante on their colleagues at the IRS, the Securities and Exchange Commission approved a creative accounting change in 1984 called in substance defeasance. This method allows a corporation to pay off large amounts of old, cheap debt with smaller amounts of new bonds that pay higher or high interest rates, and then through the magic of accounting report extra profit on its balance sheet. That's how you defease a debt. When corporations use accounting doublespeak to make money, they often use doublespeak to explain their actions. When they have to explain them, that is, see if you can figure out what Pacific Gas and Electric Company is trying to conceal in this notice, which is sent to all its customers in April 1982. One item of expense included in the rate increase recently granted to BPC, PG&E by the Public Utilities Commission, amounting to 177.4 million, was attributable to President Reagan's Economic Recovery Tax Act of 1981, which requires the Public Utilities Commission to charge ratepayers for the expense of taxes which are now being paid to the federal government and which may never be paid. This expense may increase in the future. If you can figure this out, you should consider a career in business, maybe even accounting. You would go far. That's actually really interesting, especially with today, now that the rates of energy and utilities are hiking up. And then you find out a lot of these corporations are not paying the taxes, but trying to defer that and trying to reverse engineer and trying to put it on the consumer. And it really gets deep. That's why on certain occasions I go into that topic. On my other channel, I sometimes go into it. It's great to even get this book. I know sometimes I stammer. I guess that's great too, because YouTube can get really shaky when it comes to putting up certain content. and I love reading from this stuff. I don't want them to get weird on me anyway, um, for any type of issues for sharing this information. They get really strange with reused content. You have to make it like uber original. They don't want you sampling. It's just getting really strict, and I want my videos to stay up. I've been getting needlessly reprimanded at times, so I'm like, yeah, sometimes making it a little janky, I guess that'll be good because that'll add to the original value, right? Because it's all organic, right? Only you can read certain paragraphs in a certain way on your own, right? And I do it section by section, and I'm making people like want to get this book as well. I don't know if I haven't got any issue yet for reading through this book. It's not the same as like an audio book, because an audio book is like reading through the whole thing. I do narrate, and I add my own value to this, and I do it in different sections. So if they have an issue with that, I'll have them reach out to me, and then I'll of course respect that if it's a problem. I'm hoping that it actually increases their sales and makes people actually want to invest in this book. It's one thing to listen to videos, but it's a whole other thing to actually have the book. And if they ever reached out to me, I'd be pushing this book. But I'm not affiliated with them, but it's only $19.95 if you want to go grab it yourself. But I hope that was educational, guys. Sorry it was a little clunky, but that was actually a mouthful, and we'll continue on to more sections. You got a lot of information just in those couple of paragraphs, so to not overwhelm each video, you know what I'm trying to say. Have a great day, guys. I'll talk to you soon.